Hey, so I want to share with you for a quick minute about something called Replace Your Mortgage. So we've partnered with Replace Your Mortgage, and what this is it's a replacement for your mortgage. So most people aren't aware that the traditional home mortgage was invented in the 1930s. In the 1920s and earlier, there was a lot of what's called a bank run, where all the depositors pull their money out of the bank and the bank fails and people lose their deposits, and then the banks are basically holding the bag and owing all these people money. And so what banks did is they got rid of something that was called a simple line of credit. Prior to the mortgage, people just had a simple line of credit instead. And so this would be a line of credit the bank extended to them where they could go buy a house. Now, a line of credit is a two-way loan, meaning I can put as much money into it as I want, paying into the mortgage. Then I can pull all the money back out just like a savings account. I can access that to use that for investing or day-to-day purchases, right? So this was gotten rid of and it was replaced with the conventional mortgage. The conventional mortgage is what? It's a fixed monthly payment. You have to pay that amount. You really can't pay more. Once you pay that amount, you can't pull money back out. So what that did is it forced consumers to say, I can't save into my mortgage anymore. I need to go put money into a checking account or a savings account. Okay, this opened the door for something called fractional reserve banking. When you give your money to a bank, they do not stick it in a shoebox in the vault with your name and a little bow tie on top till you come back. They're loaning your money out. In fact, they can loan out $10 for every $1 you give them. In 2020, their reserve requirement on your deposits went down to zero. Okay, and so what that meant is they could take these deposits and invest those in loaning money out for mortgages and car payments and credit cards. They can even day trade in the foreign currency and stock market with your deposits. And what are they paying you? They're paying you 0.2%. Right? So the conventional mortgage caused that to happen. The other thing it caused to happen is you're paying more interest. Right? You have an amortized loan, which means your interest payments are scheduled for the next 360 months. The bank already knows what they're going to get, and you can't really change that. Okay, so the simple line of credit is something we're actually bringing back through Replace Your Mortgage. It gets rid of a conventional mortgage. Your mortgage now becomes a two-way: deposit money in, pull money out. That reduces your interest. It allows you to use it as a savings account. You don't have the bank loaning your money out like they're doing with your deposits. And you can actually pay the house off generally in 5 to 7 years using a strategy like that, and then borrow against your house to harvest your equity and invest that for passive income. Right? With a mortgage, think about it. You might pay the house off in 30 years and that's it. Okay, with this kind of a system, you're paying the house off in 5 to 7 and then you're building passive income and living financially free as a result. So I want to encourage you, click below, get some information on this, schedule a free consultation and see if this might work for you, because if it does, this is a life-changing tool.